How to trade Forex on news releases. One of the great advantages of trading currencies is that the Forex market is open 24 hours a day, 5 days a week, from 5 p.m. Sunday until 4 p.m. Friday ET. Only the best Forex brokers can help you navigate the market. Since markets move because of news, economic data is often the most important catalyst for short-term movements. This is particularly true in the currency market, which responds not only to U.S. economic numbers but also to news from around the world. Here, we look at which economic numbers are released and when, which data is most relevant to Forex traders, and how traders can act on this market-moving information. Key takeaways. Economic data is a major short-term catalyst in the Forex market. Since the dollar is one side of many currency pairs, U.S. economic releases tend to have the most pronounced impact. The most common way to trade Forex on news is to look for a period of consolidation ahead of a big number and trade the breakout on the back of the number. A variety of exotic options are available for traders who want to capture a breakout move, but with less volatility than trading the currency pair itself. Which currency should be your focus? With the top major currencies available for trading at the best Forex brokers, there is always a piece of economic data slated for release that Forex traders can use to make informed trades. In fact, 7 or more pieces of data come out almost every weekday, except holidays, from the most followed countries. So for those who choose to trade news, there are plenty of opportunities. The 8 major currencies are familiar to most traders: US dollar, USD, Euro, British pound, GBP, Japanese yen, JPY, Swiss franc, CHF, Canadian dollar, CAD, Australian dollar, AUD, and New Zealand dollar, NZD. There are many liquid currency pairs derived from the 8 major currencies: Euro to US dollar to Japanese yen, Australian dollar to US dollar, pound sterling to Japanese yen, Euro to Swiss franc, and Swiss franc to Japanese yen. Tradable currencies span the globe, and you can handpick the currencies and economic releases you want to pay particular attention to. Generally, since the US dollar is on the other side of 88% of all currency trades, US economic releases tend to have the greatest impact on Forex markets. Trading news releases is not easy. Some news releases are more important than others. For instance, for traders who participate in the popular practice of trading around company earnings releases, not only is the reported consensus figure important, but so are the whisper numbers and any revisions to prior reports. Trading global news events is another widely followed form of trading. The economic impact on foreign and domestic markets can vary greatly depending on the country providing the information. When are key news releases? The table below lists the approximate times in Eastern Time of the most important economic releases for each of the following countries. These are also the times when traders pay extra attention to the markets if trading based on news releases. Country: US, currency, USD, time, 8:30 to 10 a.m. Country: Japan, currency, JPY, time, 6:50 to 11:30 p.m. Country: Canada, currency, CAD, time, 7 to 8:30 a.m. Country: UK, currency, GBP, time, 2 to 4:30 a.m. Country: Italy, currency, Euro, time, 3:45 to 5 a.m. Country: Germany, currency, Euro, time, 2 to 6 a.m. Country: France, currency, Euro, time, 2:45 to 4 a.m. Country: Switzerland, currency, CHF, time, 1:45 to 5:30 a.m. Country: New Zealand, currency, NZD, time, 4:45 to 9 p.m. Country: Australia, currency, AUD, time, 5:30 to 7:30 p.m. Country: South Africa, currency, ZAR, time, 4 to 5:30 a.m. Times at which various countries release important economic news. What are the key releases? When trading news releases, you need to know the timing of major releases and understand which data is important. Generally, announcements that move the markets the most relate to interest rates, inflation, and economic growth. They may include interest rate decisions, retail sales, inflation, consumer price or producer price, unemployment, industrial production, business sentiment surveys, consumer confidence surveys, trade balance, manufacturing sector surveys. The relative importance of these releases is generally dependent on the broader economic environment. In the post-pandemic years, traders have been paying close attention to inflation and interest rate decisions. Prior to the COVID-19 pandemic, the markets appeared more focused on GDP growth and employment figures. It is important for traders to understand the current economic backdrop. How long does news affect the market? According to a study by Martin D. Evans and Richard K. Lyons published in the Journal of International Money and Finance in 2005, the market could still be absorbing or reacting to news releases hours, if not days, after the numbers are released. The study found that the effect on returns generally occurs in the first or second day, but the impact does seem to linger until the fourth day. The impact on the flow of buy and sell orders, on the other hand, is still very pronounced on the third day and is observable on the fourth day. How to actually trade news? One common way to trade news is to look for a period of consolidation ahead of a major data release and to trade the breakout in reaction to the news. This may be done on an intraday basis or over several days. Let's look at the intraday chart of the euro to US dollar currency pair to get a better idea of such a trade's mechanics. In July of 2024, the euro to US dollar pair was in a fairly tight consolidation ahead of an upcoming release of the June 2024 US retail sales data. The market spent several hours bouncing between clean support in the 1.08950 area and resistance around 1.09020. Shortly before the data came out, euro to US dollar appeared poised for a breakout to the upside. The numbers came in strong. Retail sales remained unchanged on a month-over-month basis, far ahead of the consensus estimate of a 0.3% contraction. Moreover, the prior month's data was also positively revised to a 0.3% expansion, above the 0.1% figure reported previously. As a result, traders began buying the US dollar, sending the euro to US dollar pair over 250 pips lower, a move nearly 4 times larger than the 70 pip trading range prior to the announcement. A pip is the smallest measure of change in a currency pair in the Forex market, and since most major currency pairs are priced to 4 decimal places, the smallest change is that of the last decimal point. As we mentioned, trading based on news releases is not easy. The chart below shows the same currency pair 24 hours later. Despite the dollar's initially positive reaction to the strong readout, the data release was not enough to reverse the broader momentum of the euro. Over the next day, the US dollar gave back the prior gains and then lost additional ground to its European counterpart. News traders need to be mindful not only of the potential significance of a particular beat or miss but also of the broader economic environment and market trends.
Friends, thanks for watching. Please subscribe my channel for more videos.